we all understand the type of climate that we're dealing with. We're dealing with multiple offer situations.
I'd love to know sort of what's your why? What makes you tick? Why are you so successful?
Have a dialogue with your lawyer. Have a dialogue with your agent.
Both sort of passionate about sort of what we do.
Again, vet your agent to make sure that they're experienced and they're local. I like that idea.
No excuse to miss it on Saturdays from 8 to 9.
That's right.
WBZ.
And now, the show that gives you the latest and most relevant housing market news. Real Estate Radio Boston with financial expert Rick Shearer and legal professional Ali Alavi.
For you. So definitely use us as your real estate concierge and go to realestateradioboston.com. All the professionals are there, including Gabe Tavarez of Loss Mitigation Services. How are you, Gabe?
Hey, buddy.
Good.
Thanks for coming in. And first of all, thank you very much for being an extra contributor. You've helped many of our listeners sort of navigate through these waters of short sales. What I want to do is just give people just a quick, brief introduction to you again and sort of what your company does.
We work with real estate agents and sellers who in short sale situations. So if you're in a position where you need to sell your property for one reason or another, you owe a little bit more on your mortgage than the house is worth, we work with you and your real estate agent to get the short sale done quickly.
Gabe, we've covered this before, just a 10,000 foot sort of a quick snapshot of what is a short sale.
A short sale is a situation where you owe more on your mortgage than the property would sell for in today's market. That's basically it. That's it.
And do you think that people, are you seeing sort of a reduction in short sales given the fact that we're seeing some recovery, we're seeing that people are having more equity in their property, so on and so forth?
It's interesting. It kind of goes region by region. There are some regions that are actually really, really busy. So if we were going to look at Western Mass, there's a lot of people who are upside down in Western Mass because equity hasn't caught up as quickly. The market hasn't caught up. If you're looking at Boston, not so much, because obviously property is appreciated pretty quickly in this area.
Right, and that's just a testament to how all real estate is local.
Exactly. Now, I know that there's been some changes in the short sale process. Tell us a little bit about that.
Well, the things that have changed more than anything are, affect real estate agents and how they look at short sales. What's really important about a real estate agent who's listing a short sale is make sure you list that property at what you think it will sell at. So make sure you price in those things that are wrong with the roof. If it has septic issues, make sure you price those things in. So don't just list it at what it would normally list for.
Right.
If it were a normal condition, you have to factor in those repairs. You should probably bring in a contractor, talk to you guys about somebody that you trust, to bring in a contractor, and give you an accurate estimate of repairs and list the property accordingly.
We've got Mike Walsh from Walsh Home Inspection. He's an expert contributor on the show as well. Do you recommend that sellers or agents call and do a pre-home inspection for this stuff?
Absolutely. It helps. All of those things help because as the listing agent, you want to make sure you have your ducks in a row.
Right.
The last thing that you want to run into is a situation where you have the bank come in after you've started the short sale. They do a value. And you say, well, listen, there's all this stuff wrong with the property. All of us know, banks don't care about what you say over the phone. They don't care about emails. They want to see something from a licensed professional, somebody putting their name and their license on the line saying, this is wrong with the property. That they'll value. But if you're just calling them and saying, hey, listen, there's something wrong with the roof, unless you have an estimate of repairs from a contractor, it's not going to get you anywhere.
Right. I think the correct me if I'm wrong, but the lender itself is going to do some sort of a comparative market analysis of their own. They get a BPO or a broker price opinion, correct?
And what will happen is this. That BPO agent will go into the property. And unless they have some sort of appraisal background, if they're just a standard agent, they're not going to recognize those things that are really going to drag the value down. Mm-hmm. They're just going to look at comparable properties and they're going to say, well, 1,500 square feet, it should sell for X dollars square foot. This property should sell for $300,000. They're not looking at the roof damage. They may not look at a septic issue because they're not aware of it.
Sure.
So when they get back to the bank and they give the bank their value, that value is going to be high, and you subsequently will have that problem.
Right. It seems like once they get that value, they're going to hang their hat on that. And if you're going to try to change their mind, you're talking about weeks, I'm assuming, to prove that.
Exactly. Remember, we've talked about this before in previous programs. All we're looking at when we're looking at a short sale is reverse underwriting. So whereas in a normal situation where you're going to finance that property, they're looking to value the collateral. In this situation, they're looking to value the collateral again. So they want to know that they're getting accurate pricing because there are defects. So you have to prove those things out.
Now, Gabe, have you seen scenarios where the seller ends up with some sort of a deficiency?
No,
Okay.
we haven't. Deficiencies can be worked out through what's called HAFA. So any one of our sellers, we always process them as HAFA short sales, which nicks out the deficiency.
Can you just talk about a deficiency? Just really break it down. What is a deficiency?
Where they would have a balance left over. So in other words, let's say you have a $300,000 mortgage. The property actually sells for $240,000. So the deficiency would be the $60,000 amount,
Sure.
the gap between the two. Now, typically, I guess in the olden days, when we first started doing short sales, you would run into situations where people would have that deficiency. Over time, lenders and the government have stepped in and said, listen, people are selling in this situation. They're distressed. They shouldn't walk out with a $60,000 bill. And HAFA largely resolves that issue.
All right, but so it resolves the deficiency issue, but isn't that construed as income to the seller, and are there tax consequences for the seller?
That's an excellent question.
Thanks.
So one interesting thing that's gone on over the last few years is the government again has stepped in. In 2007, they said, hey, listen, we're going to give tax relief to anybody that's faced a foreclosure, a modification, or a short sale. They're not going to have to pay on that 1099. So we're going to give them blanket coverage. That expired at the end of last year.
Oh, wow.
But fortunately, the IRS has always had a tool to deal with those 1099s called a 982. A 982 is an insolvency form. Obviously, I'm not a licensed accountant, but the fact of the matter is that the 982 has worked for our clients. They have used it. We refer them to an accountant who walks them through the process, and they can get out from underneath a tax deficiency.
Now, you mentioned a whole bunch of things, modifications, so on and so forth. So I just want to sort of open up this segue into there's other ways to be able to avoid foreclosures. So if a borrower is upside down, one of their options, obviously, is short sale. Go to a real estate agent. We've already vetted those. You work with a number of those that we work with, and they can start that process. But there's other tools to be able to avoid foreclosures. Tell us a little bit about those.
Sure. There are modifications. Modification is an adjustment to the original terms of your mortgage. Largely, what happens in that situation is the lender looks to lower your monthly payment by extending out the term of your mortgage. So you'll see a lot of modifications. Instead of having a 30-year mortgage, you'll have a 40-year mortgage, which obviously drops your payment on a monthly basis and makes the property more affordable. So
Have you
that's an
seen
option.
them reduce the interest rate as well?
Yes. We've seen situations where the interest rate has been reduced. You've seen situations where through HAMP modifications, people have actually gotten reduction in principal. But those are the exception. And modifications largely are tricky because they work just like adjustable rate mortgages. So at the outset, you may have a lower interest rate, but that interest rate is eventually going to reset over time, and you're going to get back to paying what you normally would pay after a period to get.
But that's a great tool that if you're in a situation where you have a sick family member, or you've got your employment's going to get better in the future.
Yeah.
Right.
The modifications are designed for people that are in a short-term need.
Right.
They just need 6 or 12 months to kind of get back on their feet. That's what a modification is designed for.
But a word of warning. I think if you've done a modification and you end up missing a payment, the consequences are fairly severe. They will not negotiate with you any further. Am I wrong in that?
No, you're right about that.
All right.
You're right about that. You typically get one shot at it.
All right. We're running out of time. I just want to talk about one more thing. Tell me about sort of deed in lieu, real quick.
A deed in lieu is when you sign the deed back to the bank. You essentially say, listen, I'm not going to be able to afford the property. I would rather avoid foreclosure. I don't want to go through that process. So I'm going to sign the property back to you. You are then going to assume ownership of the property, and I'm going to walk away. Typically, sellers can get some sort of payment for it. It's called a cash for keys sort of transaction, where they get somewhere between $1,500 and $3,000 to relocate.
Wow.
So I just want to, listeners driving out there or listening online, I want to, sort of tell you who should be calling you. First of all, anybody that owns a property and is sort of going through a hardship and don't think that they can sell their property. If you're a real estate agent out there and just don't want to deal with them, going through the process of trying to battle through a short sale on their own, they can hire you to help. They can hire you to help them do that, but you are paid by the lender, not by the.
I know, my services are free. That's the best part.
Right. All your information is up on our website.
Mm-hmm.
Great. Thanks for coming.
Gabe.
Thanks for having me.
If you're just tuning in, this is Real Estate Radio Boston. Up next, Mike DeMella, president of Greater Boston Association of Realtors. Be right back.